Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, Dave Kranzler of Investment Research Dynamics, located at investmentresearchdynamics.com. And I got to tell you, you might know Dave as a very successful gold and silver mining sector trader, but you might not know that Dave is also a very successful short seller. And if these markets are starting to crack again, which it looks like they might indeed be doing, you might really want to check out the Short Sellers Journal and see what it's all about. Because if you plan to trade these markets on the way down, you can't just throw darts. You need to be real selective, and Dave can do that like no other can. Dave, I'd like to thank you for returning again to Silver Doctors.
Thanks for having me back, Paul. There's
Now,
probably plenty of people out there who are really proficient at shorting the market.
You're great at shorting the market. Some of the things that you put out, and then you watch the stock plummet, and I'm like, my goodness, there he went with another call. But it takes a whole different type of trader to be able to trade the markets to the downside because it's a whole new different mentality, isn't it, Dave?
I mean, it's really just the opposite of going long, right? Except you're saying, I think this stock is overvalued, and here's why I think it's going lower, and I'm going to express a short view. Whether you use puts or short the shares outright or sell short in the money calls.
Now, I don't know if you saw yesterday, but President Trump took a little stab at short sellers because of, I guess it's been Druckenmiller, and now somebody else has been talking about the market's overvalued. So yesterday, President Trump put out a tweet saying the so-called rich guys speak negatively about the market. You must all remember that some are betting big against it. And that they make a lot of money if the market goes down. Then they go positive, get big publicity, and make money going up. They get it both ways. Is that legal? He says barely legal. So here's my thing about that, Dave. Back in 2012, he said one of the positives from the plunge in household wealth is that we're in a buyer's market. This is time to buy, talking about real estate. Then something else he said in 2014 was, I left Atlantic City years ago. Good timing. Now I may buy back in at a much lower price. So isn't that the same thing as like short selling, Dave? When it comes to real estate,
it's a little different, but he didn't voluntarily leave Atlantic City. He took his casinos there bankrupt 3 times. We called it Chapter 33. And I don't know how you bankrupt a casino, because a casino is essentially a state issued license to print money. So for him to say he left Atlantic City, no, he didn't. He lost his properties there because he had way too much debt on them. So I think it's kind of funny that Trump's trying to take a shot at short sellers, because you left out a very important quote in 2016 when he was trying to get populist votes for the presidential election. He referred to the stock market as a big, fat, ugly bubble. The Dow was at 17,000 when he said that, right? So now the Dow's at 23,000. I think didn't it briefly tick over 30,000 at one point?
No, it got up to 29 and change. I don't think.
Okay, so 29 and change. So it bumped its head on 30,000. I mean, if you thought the market was a big, fat, ugly bubble in 2016 with a Dow at 17,000, then he should have been shorting the crap out of it when the Dow was at 29,000. Yeah. So, I don't understand that tweet at all. I mean, if anything, the market is rigged on behalf of the people who are long stocks, and it's rigged by the Federal Reserve, and Trump goads the Federal Reserve into dumping more money into the financial system to drive stocks higher. He's trying to goad them into negative interest rates right now because he thinks it's going to push the stock higher. I mean, he knows his reelection is going to be highly dependent on whether or not the stock market keeps going higher. Because even though follow him who are, not wealthy, because he got a lot of those votes in 2016, they're not participating in this run up in the stock market, yet they're cheering it on. It's like, the chickens in the hen house cheering for Colonel Sanders when he shows up.
Yeah.
So, short sellers provide a very useful function to the market. It's a check and balance. And you need to have short selling to keep valuations in check. It increases the liquidity of the market. It creates a much wider two-way dialogue for the market. But the Fed has essentially removed most of the price discovery from the stock market. So If anything, Trump should be criticizing himself and the Fed for what it's done to the stock market, because the stock market right now is an absolute joke.
That's an interesting point you bring up, because yes, in natural markets, you've always got a pull and a push between buyers and sellers, just like you got a pull and a push between supply and demand in an economy. And it really requires, these kind of forces where some people are betting with it, but some people are betting against it, and that would balance it out in the end.
And short sellers often expose fraud at companies. I mean, Tesla's a perfect example of that. So they provide a useful function, and it's another source of information transmission that makes markets freer and more efficient.
Like he can't blame the do nothing Dems because they keep passing all this fiscal stimulus. So, that might have been last year, and then China might have been a blame too, but now it's the short sellers. So anyway, I found defense in that. And I haven't placed a trade in 2 years, Dave, although I'm like way down. Like I'm barely even an amateur trader. I'm like a newbie amateur trader, but
yeah, you're better off.
So what is your thoughts about the markets? Because, we had the most epic crash since the last time we talked. Then we had the most epic rally, and now everybody just thinks that it's going to new highs. They're talking about 10,000 on the NASDAQ. What is your assessment of the market? Are we going to lower lows here, Dave, to take out those lows?
I mean, at the end of the day, it's going to depend on how much money the Fed prints and throws into the banking system, and how much of that money works its way into the stock market. I mean, if you look at the numbers behind this bear rally, it's low volume, it's narrow breadth, it's been predominated by the 4 or 5 largest market cap stocks in the Nasdaq, the S&P, and the Dow. So, and it's primarily the FANGs: Facebook, Amazon, Netflix, Google, and Microsoft, and a couple other stocks, and that's really it. I would bet that on average there's a lot more stocks that are negative year to date than are positive. So it's been a very narrow bear market rally. I mean, if you look at what the Nasdaq did after the tech bubble popped in 2000, it dropped something like 45%, and then there was a 40% rally in the Nasdaq, and then it headed south again, and it ultimately, when it bottomed, I think it was down something like 85% from its peak in 2000. So there's a lot of stocks that these companies have hopelessly unprofitable business models, Wayfair being an example, or Carvana being an example, that they've also been kind of a sideshow to this bear rally. These are stocks that have gone up 100, 200, 300% since mid-March, and they're not justified at all by the underlying fundamentals. I mean, you take an example like Wayfair. I mean, it's essentially burning $100 million of cash a quarter. So at some point, and who knows when and what the catalyst will be, the rug's going to be pulled out from under that. Now I think if the Fed didn't come out yesterday and basically say it's willing to go to QE to infinity, buy an unlimited amount of treasuries, it's buying corporates and munis now, it's buying junk bond ETFs. At some point, Trump's going to goad them into buying stocks. And I don't know what that'll look like, if it'll be ETFs. I mean, the Bank of Japan owns something like 90% of all the equity ETFs. So, I mean, it's just insane. I mean, it's like Chris Powell at GATA says, we no longer have markets, we have interventions. And that's what you've seen here, is a massive multi-trillion-dollar intervention by the Fed. Part of it was to support Trump's reelection efforts, and at some point, when this market rolls over, it'll rip in reverse. I just don't know when, or what the timing is on that.
Now, I read the article that you wrote on Wayfair, and I found it very interesting, because one of the things I was talking about with Charles Hugh Smith the other day is that I think that there's some hidden inflationary pressures that people aren't thinking about. And when I say that, I mean, if you think about like all of these zombie corporations that are egregiously overvalued or that are losing money, and the only reason that they exist is because of cheap credit. What have they been doing? They've been bringing products to market cheaply that otherwise wouldn't have been that cheap to bring to market. So when all of these
Yes.
companies go away, what does that mean for prices? That means that, well, if it was cheap debt that brought it there in the first place, prices have to go up because how can that continue? Am I thinking about that right, Dave?
You are. I mean, those aren't inflationary forces that we're seeing yet. I mean, most of the currency devaluation, which is really the economic definition of inflation, right? You're increasing the money supply over and above the marginal increase in wealth output. Well, we don't have wealth output right now, but we've got massive monetary money supply inflation, and most of that inflation is showing up in right now the stock market, and it's also it's propping up assets, primarily subprime and should be subprime credit assets that otherwise would be headed toward 50 cents on the dollar or zero. And so in a way that's kind of a hidden inflation. It's a egregious misallocation of capital. But you're right. I mean, a lot of these, I just call them unicorn type companies, like Shopify, Wayfair, Carvana, etc. They Their business model is predicated on generating sales, and that's what drives the stock price. And so, as long as they're reporting increasing sales, as long as they've got sales growth, the stock market loves it, and it bids the stock up, and like clockwork, the insiders, as soon as literally a day after the 8K is filed for quarterly earnings, the insiders are dumping shares again into the market. So but what they're doing is you're right, they're bringing products and services to the market at prices that are low, that are too low to cover the all-in cost of their business model. And eventually the market's going to stop funding these, and that's when they'll hit the wall. I mean, Wayfair would have hit the wall this year, except it just got a $500 million financing done. And if it didn't have that, it would have hit the wall by the end of the summer. And we will see that eventually. And then you're right. All of a sudden, there's less competitive price pressure for companies like Restoration Hardware, Ethan Allen, et cetera, and they'll be able to raise prices.
Yeah, and
To
I
better
also think,
reflect the true economics of that particular business.
yeah, because I also think it could extend even to like the food service industry, like the 9.99 meals you can get at Applebee's or something. I mean, that's not coming back when these restaurants come back, because a lot of these companies are just, they're losing money as it is in the first place just to
Yeah.
get customers in the door. Or like all these $20 jeans at JCPenney, stuff like that, right? Like this has been sustained through all of this debt. Now, speaking of the debt, we just got the Treasury report on Tuesday, and the federal government spent $1 trillion in the month of April, Dave, and 750 billion of that was deficit spending. Now, here's the way the mainstream media spun it. They said, well, since tax filing got extended, they missed out on all that tax revenue. But I'm thinking, but wait a second. If all of these people are unemployed, surely some of them can't get unemployment benefits. And those who are getting less. So they're paying less in taxes because unemployment is less compensation. So just what are your thoughts on the debt and just the fiscal stimulus, the monetary stimulus, and just the massive amounts of pumping? Did you have anything you would like to add on to that?
Sure. I mean, the fiscal stimulus, very little of it's trickling down to Main Street and the population. I mean, you get a household of four, and all of a sudden, the income earners are out of work for 2 months, and Mnuchin sends them a $1,200 check. It's like, what am I supposed to do with this? This is just going to buy food to put on the table so my kids don't starve, because my monthly fixed payments just for debt service, mortgage or rent, auto loan, credit card, insurance is way more than $1,200, So it's like, I just look at this and I laugh, because the Fed is printing trillions and giving it to the banks for free, right? And and corporations are getting, loans, forgivable loans, and they're basically getting free money. So the big corporations and the banks are getting free money, and Main Street, the little guy has to borrow. Small business owners who think their business is going to survive through this, and they get the payroll protection plan loan, they have to pay that back.
Mm-hmm.
And then all of a sudden, so you got some of this money allocated for small businesses, most of which will never come back. And that's the backbone of the country right there. That's who employs the majority of the people, not the banks, not the few remaining large industrial concerns, because most of them have offshored to other countries. The households get, $1,200. Great. What am, I'm not paying my rent. I'm not paying my mortgage. Forget the credit card. Forget the auto loan. I need this money to survive.
Mm-hmm. Yeah. So it sounds like, there's just all this money going out there, but it's not going where it's needed the most. And then when you talk about surviving, did
one
you see
more
this
thing on the debt. I have a longtime colleague who, I was looking at the debt, the end of the year Treasury debt outstanding projections, 25, 27 trillion. And I've got a colleague who's gone through all the numbers. He's a CPA originally by background, and he manages accounts now, and he's been a business owner, so he's got a wide breadth of experience. He went through everything that's been announced in terms of stimulus packages, treasury amount of treasury debt that to be issued, and by the end of the year, the treasury debt outstanding is going to be at least 30 trillion. I don't care what they say in the mainstream media. I don't care what these idiots on Bubble Vision are saying. He ran through the math, and I might have it in my short sellers journal this week. If not, I'll probably just do a blog post on it. And it's going to be at least 30 trillion by the end of the year. And he thinks there's a shot that it'll be as high as 35 trillion. I don't know if it'll be that high, but 30 trillion is a layup.
Yeah, and people were thinking, if Trump has a second term, it's going to be 10 trillion overall that he adds, but it's sounding like it's actually going to be more like doubling, probably.
A lot more.
Mm-hmm. And it's interesting you're talking about the survival aspect of it, because did you see the CPI the other day? And like food at home went up like 4.6% or something like that, and like dairy's up like over 5%, meat's up almost 7%. So yeah, not only is it less money, but it's not going as far.
Where do the guys who construct the CPI do their shopping? Like, do they go and get their food at Goodwill?
Mm-hmm. Yeah.
Food's up a lot more than that.
Yeah.
I do a lot of the shopping for our household, and just in the last 2 months, all the necessities have gone up in price.
Yeah, interesting. And I'm still having trouble finding the meats. The shortages are indeed real, because I keep placing all these orders and going to different places, including Costco and Aldi's, and I can't find ground beef, or I can't find chicken breast or something like that. How are things going in Denver? How are you faring out there, Dave?
I mean, it varies from grocery store to grocery store. I go to King Soopers, and which is owned by Kroger's. And it's right now, anyway, the only thing that's hard to get is toilet paper and paper towels and napkins. And then, I was in there the other day, and I noticed that half of the pasta aisle was wiped out. But, compared to a month ago, a lot of the grocery stores seem to be fairly well restocked. To this point, meat hasn't been a problem, but, I've been buying high quality meat cuts and sticking them in our freezer just in case. Mm-hmm. So, I'm going to eat them anyway. So,
yeah.
Yes,
That's
may as well stock up on some of it just in case. So I don't know. I'm it's a wait and see thing for me in terms of how bad this meat shortage gets. But of course, in Ohio, there's a lot more meat eaters than Denver, probably.
Yeah. I mean, I like to eat meat and try. I must confess, I probably eat meat once a day, so I don't know if that's good or that's bad, but I do like my meat. And I'll tell you, after running a homeless shelter and a soup kitchen for 3.5 years, I guarantee you, Dave, not one person who's hungry is a vegetarian. There's no such thing as a vegetarian in the face of hunger, Dave. Now, Dave, moving on to silver here. It's interesting, because I want to say a couple things about silver, then I want to get your thoughts, because for a while there on the daily chart, they were painting a couple lower lows. And all these traders are like, oh, the bottom's getting ready to fall out of silver. Watch out, watch out. Then last week we busted up through the 50-day moving average. We stayed above it, and it looks like we might even try to break out above 16 now. Now, here's my point. And this is what I want to get your thoughts
over
on.
16 right now.
Yeah, look, nice. I'm looking at that too, and gold looks like it's testing 1750. Here's what I want to get your thoughts on. You know, a lot of people are saying that gold and silver are going to crash if the market starts crashing again. But looking at the charts, if you think about it, technically silver took out that low from 2015. So, I mean, we've been deflating in price, crashing in price for 9 years. And furthermore, in 2008, silver bottomed in November and started rising before the S&P bottomed in March of 2009. So just, those are just my thoughts why I don't think that silver is going to crash like people think it is. Do you have any thoughts or what are you looking at with silver right now, Dave?
People who think silver is going to crash are not, they don't have all the facts or the history or have done the research on the market. I mean, as a matter of fact, I mean, you mentioned the 50-day moving average. The gold silver ratio went below its 50-day moving average 5 business days ago. And if things stay the way they are, it's going to go even lower today because silver's outperforming gold right now. And it obviously it has been since the gold silver ratio has been going lower. So since I've been involved and dedicated to this sector since 2001, I kind of threw out the charts in 2004, 2005 because the market is there's so much official intervention in the market and so much bank intervention in gold and silver that a lot of times the technicals are completely useless. So I think what we're seeing here is, and yesterday the market was down a lot, obviously, the Dow and the S&P, gold and silver were both green. And I think what we're going to start seeing here, and we have been seeing it with smart money and with Eastern Hemisphere central banks, is that they've been accumulating physical gold. And that's a big part of what caused or has caused the shortage of gold bars in London. And I don't think restarting up the refineries in Switzerland are going to fix that problem because it just means people are going to want those bars for their own delivery and their own safekeeping. So, and I think, right now, silver's obviously historically cheap to gold. It's historically cheap to financial assets. And I think what we're going to start seeing in a big way is we're going to start seeing, the monetary qualities, well, of gold, but especially of silver, because I think a lot of the money that's going to start coming out of these overinflated financial assets, first and foremost stocks, is going to find its way into silver, and not, hopefully it goes into physical silver and gold, and not the paper derivative ETFs and not the futures. But I haven't been watching the COMEX silver futures delivery process, but we're seeing a lot more gold being delivered. And whether or not, I don't know how much of that gold is actually being removed from COMEX vaults for private safekeeping, but there's certainly a lot of people who, standing and creating, a title claim on that gold that's in the COMEX vaults. Mm-hmm. So,
and what are your thoughts
another
on
aspect of the silver market that's really interesting? I hadn't been paying attention to it, is the open interest for the longest time in silver futures was over 200,000 contracts. And I happened to look at it, I don't know, maybe 3 weeks ago. And I was like, I did a double take because the open interest was down to like 138,000 contracts, and to me, it's not getting a lot of commentary in the media, but to me, that's kind of, it's extremely significant because it means that the banks have been working very to cover their net short position in paper silver. And there's got to be a reason for that. Mm-hmm. So, essentially the paper market's there's been a significant contraction in that. And at some point, I think that's going to show up in the physical silver market. And well, we've already seen it to an extent with the premiums on silver bullion coins. So, I think if someone wants to, if they don't want to pay $1,700 for an ounce of gold, you know, go buy, go buy five rolls of Silver Eagles, something
Mhm.
like that. You'll be
Mhm.
just as well off, if not better off.
And I wanted to ask you, because I also wanted to follow up with that about the trading volume, because yeah, I've been noticing that too, with like the trading volume is also down, and that's another one of the reasons that all these, the technical analysts out there are saying that that the gold and silver are going down because the trading volume is so low, and then it's been set up bearish. But did you have anything you wanted to add on that when it relates to gold? Because I know there's been some hope there that with the recent crisis and bringing in those London good delivery bars and all the shenanigans they've played over the last couple months, there's been some hope there. But have they kind of like stabilized the COMEX at all, or do you have anything else you wanted to add to that?
Who knows about the COMEX? They definitely haven't stabilized the situation in London because through Ronan Manley's exhaustive research, he went through the latest GLD 10Q with a fine-tooth comb and discovered that the GLD Trust is borrowing gold bars from the Bank of England to, as a sub-custodian. Now, legally those bars they don't get moved into the GLD trust, and I don't even think the GLD trust has legal ownership to those bars. It's essentially a lease transaction. So that tells you there's still a huge shortage of gold bars in London. And it's not a function of transportation. I mean, there's been plenty of gold bars that have been flown around the world during this quarantine period. It's just there's as you know, the derivative gold and silver world it's an inverted pyramid, and at the bottom you got physical gold and silver, and you got this huge web of paper gold and silver on top of it. And it doesn't take a lot more people at the margin or a lot more entities to start demanding delivery, and you're going to blow it up. These guys are lucky right now because India's been completely locked down. Gold market is essentially for lack of a better term, it's non-existent right now. In India's, the usually the largest or second largest gold importer in the world, and they're completely dormant right now. And yet the price of gold has been moving higher while India's been dormant. When India wakes back up, look out above.
Mm-hmm.
And they also, they've also quietly been large importers of physical silver.
Mm-hmm. Very interesting. Now, Dave, I just kind of wanted to get your thoughts on this because you're definitely an expert both ways. You're very successful both ways. So just what are you looking at more right now? Are you looking at the mining sector? Are you looking at the short side of the market? Like what's sparking your interest and why is it sparking your interest in the market?
Well, again, I think it's notwithstanding what the Fed's doing in the markets right now, I think the short side of the equity market is a higher probability trade than going long. And there's a there's a lot of companies out there, not the least of which is Tesla, that are insanely overvalued. And at some point they're going to go lower. And if you can stomach the volatility, you short a small amount of shares of some of these stocks like Wayfair and Tesla, and put in stop losses for prudent capital management. But you want to be short when these things start ripping in reverse because it's going to happen eventually. However, I will say that regardless of what the Fed does with the stock market, the precious metals and the mining stocks right now are a no-brainer investment, complete no-brainer investment. And that goes from, the large cap producing mining stocks all the way down to the junior exploration companies that have highly prospective projects. They're not all no-brainers, especially in the junior world, but if you can kind of navigate your way through it, there's a lot of money to be made there. And gold and silver right now, I mean, that's the ultimate hedge against what the central banks are doing to the monetary system.
And now, Dave, a couple more questions here today. The other thing though is, have you noticed in the last couple of days, it seems like the trade war is trying to get back into front page news again? do you have any thoughts about what's going on with that? Like, it used to be the CCCP, and now it's the CCP, and China's just, they're the cause of absolutely every problem in the world, it seems. So, are we really going to start up the trade war when global trade has collapsed? I mean, what are your thoughts on that?
I think the U.S. has been looking for a reason to pick a war with China for a long time, and this may be, this may be what's going on behind the scenes. So I know Trump. I think I saw an article, or I don't know if it was a tweet or just an off-the-cuff remark. Trump basically said maybe we should consider cutting ties completely with. So that's actually a whole other aspect to these financial markets that's being completely ignored. But you're right. But it's not just the trade war. It's a lot more than that. I mean, there's tensions are escalating in the South China Sea again. So and certainly both countries have made military overtures toward each other in that area. So when everything else fails, you go to war, and that's always been my biggest fear since I started. Really, I left Wall Street and started studying the truth about the financial markets, etc. My big fear is that eventually, the conflicts between, obviously we've had a shift in the geopolitical power structure of the globe, right? Russia and China are loosely allied. They trade with each other in their own currencies. They don't even use the dollar for that. And when you get a power shift like that, and the dollar status is starting to fade, the reserve status, and the U.S. isn't going to let that happen without a fight. And so that's always been my fear. And this may be, the start of that. I don't know. I hope, I hope it's not, but it's something to be aware of and something to watch.
So that is something that I'm starting to watch here, because I just noticed it coming up, especially this week, it seems, because there was the whole virus aspect a couple weeks ago, but now the trade war is coming back, which is why I mentioned that.
Here's what I think that reflects. I think the powers that be, and maybe even Trump at this point, I think they realize that this economy is not going to be a V economy. I mean, Mnuchin was out saying, "Oh, we'll almost have a full recovery by August." No, this economy is not coming back, and it's probably going to get worse. And that's usually the type of catalyst that leads to international military conflict. We can't fix the economy, so let's go to war because that'll rally the people behind our government.
Mm-hmm. Yeah, that's a scary proposition. So that's kind of what I'm looking at, Dave. As you're moving through spring and moving into summer here, what are some of the other things that are on your radar?
Getting my tennis game back in order, for God's sakes. I've been playing, but not enough.
That sounds.
It's going to be interesting to see to what extent the Fed continues to print trillions and intervene in the markets and support the markets and completely remove economic reality from the financial markets. I mean, make no mistake about it. The Trump's getting rich off of this too, off of the inflation of financial assets going on right now from the money printing. So, and the bottom 90% are not getting rich off of this. They're deferring their mortgage payments and they have bills piling up. So I'm going to be watching, the debt delinquency and default numbers. And I'm going to be, I watch the stock market and the precious metals market every day, all day long. And, I think right now we're in a period where you need to buy all sell-offs in the precious metal sector and sell all big bounces in the stock market. And I'm also going to watch, to try and see exactly how much of this economy actually does bounce back, because I think for quite some time, very little of it will.
And tell us a little bit about the Short Sellers Journal and the Mining Stock Journal. What all can you get out of that?
Sure. Well, the Short Seller Journal is a weekly newsletter, and I typically the format is I spend say about 30% of it going through the economic reports and other interesting related uh, research sourced information and data. Um, broad stock market analysis, and then I review short sell ideas, whether it's ones that I've been recommending for a while or whether I'm presenting a new one. So, and then the Mining Stock Journal it's bi-weekly. I publish it every other Thursday. The next issue is actually out this afternoon, and it's kind of a similar format. I have a short commentary about what's going on in gold and silver and the mining stocks in general. And then I go through and I update, any relevant news on the companies that I cover and recommend. And just for the record, I'm not sponsored by any gold mining companies. I don't take payments. I personally invest in most of my ideas, and the fund that I run invests in most of my ideas. Not all of them, but uh, and then I will present new ideas, and when I come across something that I think is a no-brainer risk return opportunity. So interestingly, one of my subscribers yesterday, who subscribes to both, just sent me a really nice comment. He said your newsletters are the best value on the internet.
Indeed, it is. And in these times, people are going to need every edge they can get, and they really need to get it by visiting Investment Research Dynamics. Dave Kranzler, I'd like to thank you for joining us today on Silver Doctors.
Thank you for having me on again, and I appreciate the kind words.